Hello everyone, hope all of you are doing well. First of all, there are so many changes happening in our Indian markets, especially future and options. On a daily basis, there is new news, and as you already know, that weekly expiries we had earlier already discontinued. We are left with only Nifty and Sensex for a week, and also in that there is a spread issue. So many things are going on, and it's really a high time for anyone who is dependent or kind of monitoring markets on a daily basis to look for other alternatives. And I'm already working on that, and many aspects are going on with respect to that point. And in that, crypto markets is one of the points that I wanted to discuss in today's video. Basically, how one can trade in crypto future and options. And not just that, there are so many things that are like a hidden things. Like we need to understand those aspects before even thinking about trading in crypto markets. And I'm going to explain about all those stuffs in a detailed manner. It is going to be a detailed tutorial on how one can actually get started with crypto markets, especially future and options of crypto. So that is the whole agenda of today's video. Please watch this video till the end to get the complete clarity. The first and most important question here is that whether trading in crypto markets, is it legal or not? First of all, there is something called as crypto as an equity. So you can trade in crypto, whether it is Bitcoin or any particular coin, so that you can take as like your stock investments. You can trade in them, you can invest in them. So that is flatly taxable for 30% at the moment. It is not like illegal, not even like illegal. So there is a gray area, and now if you are earning any profits, so you can pay 30% tax on it, and you can earn the profits with respect to Bitcoin. So now in today's video, what I'm going to discuss is basically trading in future and options of Bitcoin. There is something called as FIU. It's not like SEBI, but they are the entity of Government of India who monitors the international transactions, and under them the exchange that I'm going to discuss today are registered. So it's called as Delta Exchange. The first question is it legal? Yes, it is kind of legal because we are trading in the derivatives of crypto markets. It is not direct crypto market, and hence it is considered as a business income, not as a speculative income. The moment it is considered as a speculative income, it will go to the 30% flat tax slab. But here we are dealing it as a business, and we are trading it in a future and options. As like our markets, we are going to include that it as a business income when we are filing the tax. So that is the basic clarity I got so far from the exchange itself. And very importantly, whatever the amount that we are going to transact. Earlier there were some issues with the Delta Exchange. Even I had contacted with a few of my friends. They said that there was an issue when withdrawing the money, because earlier there was no specific terminal from the Delta Exchange for the India. Now they have introduced a specific terminal for the Indian markets where your transactions are safely transacted between your own accounts. I'm going to explain that part in the coming section. Basically, it is kind of a legalized thing at the moment. It is registered under FIU, and you can trade in derivatives of the crypto markets, right? So derivatives, it could be futures or it could be options, right? So I hope that point is clear. So as like our demat and trading account, you also need an account to trade in futures or options of crypto markets. So for that, you can use the link given in the description. You can open an account and start exploring the features at least. So as I said, it is an exploration part right now. I haven't scaled it up, but I'm working with respect to automation part. I'm also going to explain that in the upcoming section. So I hope this point is clear, and taxable part is also clear. Let's get into the terminal. Once your account is opened, and you need to log into the account as like we do for other or demat accounts, similar to that, you just need to log into the account. And here you can see that it is Delta Exchange India. For India, they have given a specific terminal you can utilize and you can trade in. The reason why they have given it is basically there is a volume surge in crypto markets. So basically many people are showing interest because already you know the story, right? So people want to diversify their capital, and in that perspective, as you can see, the overall platform is now designed for Indian markets, right? There are so many options available. Basically, on a broader sense, there are two categories. One is you can trade in futures of crypto markets. As you can see here, there is a watch list, right? You can create your own watch list, the symbols that you want to monitor. There is an options, right? So it is like options. The famous options are presently is Bitcoin. BTC means Bitcoin options. So, and there is Ethereum, right? So these are the two famous options. And the good part is, at the moment, good part is there are multiple variety of expiries. As you can see, today is the 10th December. 10th December daily expiry is there. Every day there is an expiry of BTC and Ethereum. And similarly, 11th, 12th, every single day you can choose the expiry and you can trade in options. So this is the option chain we are presently seeing, right? So bid, ask, quantity, it's similar to the option chain that we see for our Indian markets. But my focus at the present moment is in futures market. That is where I'm presently interested in, and that is what I'm going to presently explain. As you can see that at the top corner we have markets where you can monitor different markets. The moment I say markets, you can see that futures, and you can get the analytics window also, where you will be able to see open interest like we see in our markets, sensible and also that kind of open interest change you can monitor on a daily basis, volume versus strike basis volumes, what is happening in futures and options market, and IV, implied volatility, what is happening, implied volatility details, tracker activity. There are so many features involved here, like we can analyze options, but my present most focus is on futures market, where you can see there is a Bitcoin, right? The moment I say Bitcoin, it's called as a perpetual, it's a continued futures contract. Anytime you can buy it, anytime you can sell it. So that is a kind of contract it is. Bitcoin, Ethereum. At the moment, if you look at the 24 volume, highest volume, it's of course in Bitcoin, and then we have an Ethereum. Basically, at the present moment, we have a plan to trade with BTC and ETH. That is the basic idea at the present moment, because the spread or the liquidity is very high in these instruments at the present moment. There are also other instruments you can check, and you can trade it like a stock. So even though it is a futures, you can trade it as a stock. And also, if you are someone who is like interested in automation of the trades, or if you know Python and if you want to automate your trades, you can also utilize the analytical window at dashboard to visualize options that I have already shown this. Trade history, you can download the trade history, tick by tick data you can download, and you can use the data to analyze the information. So at the present moment, we have already made a system that can bring the data to AmiBroker, and from AmiBroker, because our most of the systems are designed in AmiBroker software, from there we are going to place an orders. At the moment the trial is going on, I am also going to show that particular part to you. So this is a basic overview. You can broadly trade in futures and options of different cryptocurrencies, but at the moment, looking at the liquidity, futures make a lot of sense. If you are someone who is a trend follower, definitely you should check out BTC and ETH, because these are the instruments very smoothly traded. And let me also show you kind of liquidity that is available in cryptocurrency, basically Bitcoin, right? So as you can see here, 97,284 to 84.5. The instrument that is trading in double numbers like 97,000, 1 lakh, you are getting liquidity at $0.5. So basically, it's like the instrument in our markets trading at 1 lakh, and the spread is available at in 0.5 rupees. So that is a kind of huge volume is presently available and presently present in both Bitcoin and also let me also show you Ethereum. Right? If you want to check Ethereum, you can see 3743.95 and 43.95. Almost very closer spread is there. There is no much of worry in terms of the liquidity. Huge liquidity is available with respect to scalability. Also, it make a lot of sense to trade in these instrument at the present moment. Now let's get into the practical aspects. So to trade any instrument, whether it is Indian or crypto markets, you need money in our account. So that is very, very important. I'm going to show that particular part because that is very crucial, because how the transaction happens, that needs to be understood very clearly. As you can see, there is an option for adding the funds like we do in our regular demat accounts. You can simply select this particular part. The moment you are registering into the account, it will ask for a verified bank account, the bank account that you usually deal with. So that is already mapped here. And while opening an account itself, they open two different accounts. As you can see here, the account number is already given here, and IFSC code, and it is an Equities bank, and it is a current account. It is highly recommended that you transact IMPS. Basically, the another bank account, it's a current account opened while opening an account of Delta Exchange itself as a separate bank account. So this account we need to add in our regular bank account, and whenever we want to transfer an amount, we need to transfer that money to this IMPS only, then definitely you should transfer that money to Equitas Bank. Or if you want to transfer NEFT, you can transfer to this particular details, right? The moment amount is available in that account, immediately that will be reflected in your wallet. You can see, you can follow my cursor. This is where the wallet is. At the moment I have $14.5. For easier calculation, what they have done is they have taken a reference of 85 rupees, right? 85 rupees. For example, 85 rupees per dollar. For example, if you add around, let's say around 5,000 rupees, right? It is in rupees, but they will convert. Notionally, they will convert. It is not an actual value. It is a notional value. 5,000 rupees divided by 85, how much? The moment you add 5,000 rupees, it will be reflected at 5,000 rupees. But however, for calculations purpose, for their system calculation purpose, they will use it as $58.82 at the present moment, right? Let me show you how we can add the funds. At the present moment, I have around 1.23k rupees, right? 1,200 rupees at the present moment as an amount in INR. If you convert that to dollar by taking a notional value of 85 rupees, then it would be $14.5. Let me add some fund to the account. Let me show you how we can do that. So for IMPS transactions, I have already stored these details, whatever the details that is in my name only. So basically it is open in Equitas Bank at the present moment, that I have stored in my regular transactional bank account. And let me transfer some money, right? So right now I'm going to do that. Try to concentrate here, how efficiently and how immediately it happens. Let me do that. Just a moment. Yeah. So let's add around 5,000 rupees. I am selecting IMPS crypto. Right, I'm going to scale this particular point. At the moment, even if you have 2,000 rupees, 3,000 rupees, also you can explore the different options available. Even you can also place orders for one lot. There are so many options. I'm going to show that to you right now. So let me proceed. I'm adding 5,000 rupees now. So just a moment. Yeah, from my regular bank account, I have added an amount, and as you can see, transfer is successful. The moment it is done, right? It is happening in live. You can see 6.23k in terms of rupees, right? If you just place a cursor on it, it would show you $73.33. You can trade this much of value at the present moment, but they are going to provide certain leverage. This is the next topic. Basically, you will get crazy level of leverage, and many of my friends and also those who don't know anything about crypto markets have opened an account with a few of the brokers, and they are trading with 50x 100x leverage without even understanding what it can do to their account. So that is also one of the main purpose I am going to explain that particular part. Just because there is an availability of leverage, even you can take 200x leverage, right? So if you, for example, you have 1 rupee, you can trade worth of 200 rupee. Just 0.05%, 0.01% movement in the instrument is sufficient for wipe out your account. So while taking leverage, be very careful. Effectively managing the risk is very, very important. And now I'm going to talk about that particular part, how one can actually calculate the risk, because the way we trade futures in crypto markets, especially I'm going to take an example of Bitcoin, it completely differs when we trade normally our future and options market, right? So we have to calculate in terms of the dollar, and then we have to make the position sizing accordingly. That is a important and interesting part. I want your complete attention to understand this particular part. And one more point I forgot. So basically, when you want to withdraw the money, you can simply visit your balance. At the moment it is available 6.23. You can simply withdraw here. Say for example 500 rupees I want to withdraw, just for example purpose. Withdrawal to the registered account, the regular transactional account, and you will get 500 rupees, right? Withdrawal fees at the moment it is saying 2.5 rupees usually, but now there is no withdrawal fees. It is 0 fees. Let me submit a withdrawal request, and it will ask for email verification for verification purpose, and it will ask for a 2FA code. As you already know, in Google Authenticator we make 2FA authentication. Let me add that as well. Right, if I submit, yes, withdrawal request received, and awaiting processing. So basically you can check your details once this is done. So this will automatically be transferred to the regular transactional account I have. So for that the amount would be transacted. Now let's visit the futures part. In futures, right? So I'm going to talk about BTC, right? So Bitcoin. And in this, as I said, like in terms of the overall movements of the market, momentums are really good, and it is a 24/7 market. So in that sense, I would strongly recommend to automate the trades. And there are multiple options they have given. And one is that in terms of the algo, if you look at trading bot they have given, by using the trading view, if you can develop your strategies, or if you can utilize the present available strategies in trading view, you can convert that alert as a trades and directly place an order in your account, right? If you want to know about the details of that part, let me know in the comments. I may plan further videos on that. And you have an APIs, like we have an APIs for our regular brokers in India. So they also providing APIs. One is for historical data and real-time data, and also you can place order, you can modify order, you can cancel the order. There are so many options like we do manually. So you can utilize the APIs for every single action. There is an API, you can utilize that, and there is a separate library for it. You can simply visit their APIs library. And if you are someone who is comfortable in Python and all, you can easily understand that particular part. So I strongly recommend you to explore that as well, right? Once this is done, once we have the money in our account, now comes Nataraj, tell me how to place an order, right? You know that trend analysis and all it remains the same. It is basically the same. Price action trading and everything remains the same. Once you know where to enter, the point comes how to enter. Let me explain you how the order book looks like. So basically order looks like, now let's assume because of some reason, right? So you want to buy the market, but before understanding the order, it is highly important to understand the risk management part, because any position sizing that you make, it should be in line with what you can risk. For example, let's assume at the present moment, the beauty is that you can trade in cryptocurrencies in fractions. As you can see here, one lot of cryptocurrency, in this case 0.001 Bitcoin, which means how much Bitcoin is traded in dollar. For one lot, how much money you need if you don't want any leverage. In that sense, 0.001 is a lot size multiplied by present price of the Bitcoin. So 97,000 approximately, I'm taking $97,000 is worth of one Bitcoin, and multiplied by 0.001. $97 is what you need to trade one lot of Bitcoin at the present moment if you are not taking any leverage, right? I hope this point clear. $97 in the sense 85 multiplied by 85, around 8,200, 8,500 rupees is needed for to trade in one particular lot, 0.001 Bitcoin, one lot. And that is equivalent to around 8,300 rupees. If you are not opting any particular leverage, this is the ideal amount needed. However, you can opt for a leverage, but make sure that you make your position sizing in line with the actual risk involved. How you can calculate that is very, very important, calculating the position sizing, right? At the present moment, imagine I want to buy the market because it is breaking. Just an example, it is breaking higher high and I want to buy the market by keeping my SL somewhere around 96,909. So what is the overall risk that is involved in this trade? You can see stop is 771. It is not the points, it is the dollar, because cryptocurrencies are trading in dollar. If you opt for one Bitcoin, to complete one Bitcoin, what would be the risk? $771 multiplied by 85. So you have a risk of 65,535 rupees if you opt for one lot, right? But you don't want to risk more than 500 rupees, right? That is how you want to trade now. Imagine my risk limit is, let me note that, 500 rupees is a maximum risk I want to take in this particular trade, right? How I can make my position sizing? Maximum risk is 500 rupees. First, I need to convert this 500 rupees into dollar. How I can do that? 500 divided by 85, which is how much? 500 divided by 85 is equal to $5.88. Now we have the dollar value, right? Once we have converted our risk amount into dollar, we have to divide this by the risk actually it is there in terms of the dollar. How much risk we have? Around 771, right? So I want to add that here. If I do that, 0.007. 0.0076 is the number. We can simply reduce that to 0.007. Since we can trade in 0.001 Bitcoin, which is equal to 1 lot, right? So basically, by placing in this particular trade, by placing 0.007 quantities of Bitcoin, you are making sure that you will not lose more than 500 rupees in this particular trade. This is how we should calculate our position sizing. Don't take leverage just because it is available, because let me show you that particular part, right? So if you go to the order window, if you simply visit the order window, if you simply visit the order window, you can decide how much leverage you want. For example, in this case, even if I place 200 or 150, 100x of leverage, I can simply do that, right? Say for example, I want to take 50x of leverage that is available, and with how much, around 5,000 rupees, 5,700 rupees, I can trade in how many lots. Say for example, if you want to 100%, if I want to utilize, you can see here, if I want to utilize 100% of the margin, I can easily trade in 32 lots, right? My risk will be defined based on this. As per my risk, 500 rupees risk, I can only place 0.007, which means 7 lots, right? I can simply select lots here. You can place in terms of the USD, you can trade with respect to direct Bitcoin itself. Lot is a very simple solution I have found for placing an order. In this case, imagine it is showing 32 lots with respect to 50x leverage and 100% utilization of the leverage. I can place 32 lots, but I don't want 32 lots. I want to place 7 lots. That is a risk management I have here. By placing that, I am making sure that I will not lose more than 500 rupees in this trade, even though my stop loss triggers. This is key point. This is very, very important. Just because leverage is available, don't take that leverage, because in this case, I'm going to explain that in a detailed manner. Commission or the brokerage that you pay here, it will be based on the transactions you make, right? It is a fractional value. That is why it is highly important that you place orders according to the risk management, not according to the leverage. I hope this point is clear. I'm stretching that point because it is highly, highly important, right? So now I have considered to place 7 lots. Let me do that. 7 lots. How much available margin I have? Around $67.44. What is the margin requirement to place this particular order? 13.66 USD, because I have opted for 50x leverage, right? So now I can place market order. I can place limit order, right? I have both the options here. There are 2 types of orders, and based on that type of order, your commission will be defined. There is a taker order and there is a maker order, right? In simple words, if you are entering into market as a player, market order, right? As a market order, then it will be considered as a taker order, right? If you are entering into the market with respect to limit, for example, right now market is trading at 97,627. If I'm placing a limit buy at 67,620, 625 and market hit that limit, you are not forcing yourself to get into the market. Basically, you are allowing market to get into your price. Then it will be considered as maker. What is the disadvantage of it? You cannot enter whenever you want. You have to wait, and there is no guarantee of order execution, right? So that is a disadvantage of limit orders. So that will be considered as a maker order, and for that you have to pay 0.02% of commission. Let me show you with calculation, right? So let me open a calculator. Say for example, you transacted for 1 lakh rupees, right? 1 lakh rupees. Considering that you executed the order in as a maker, as a limit order, and you waited for market to get enter into your position, and that's how you entered the market, then it will be considered as limit order or the maker order. And in that sense, you can multiply 1 lakh rupees worth of transactions, 0.02 percentage, sorry, 0.02 percentage. You can divide it by 100 because that was not a fraction value. Around 20 rupees you need to pay for one side transaction. Suppose imagine 1 lakh you entered and 1 lakh you exited, you have to pay 40 rupees transaction. So there is no other charges. The GST and everything is already included in this. If you are a maker, if you are placing a maker order, then you have to pay 0.02 percentage fractional value. And the main part is that even if you increase your position sizing, the commission that you pay or the brokerage that you pay will increase accordingly. That is why, number one, you should not place multiple orders. Scalping and all is kind of a difficult, especially in futures market, since you are, let me place an order and then I will explain. Okay, market is moving, so hopefully we may get some profit. So just for example's sake, let me place a market order itself, right? So I want to buy the market, and as you can see, my order is submitted, order is filled. I am with 7 lots. I am entering in I have entered the market. And the good part, you can see PNL and everything here, $0.05 US dollar, we are in a profit, and you can monitor your position sizing here. So if you just order history, there are many orders going on at the present moment. We are I have placed multiple orders there because we are working on some changes. So as you can see, the present PNL and everything here, and you can also place SL. Right now there is no SL, you can add one, and you can add the take profit, and you can add stop loss. At the moment I want to add market stop loss at what was our stop loss level? 96,000 sorry, 96,915. I missed that part. 96,915, right? 96,915 US dollar. I'm going to place my stop loss market order. Let me confirm. And as you can see, my stop order, you can see, you can monitor the stop order separately here, and you can modify it anytime you want. You can cancel it action wise. There is an into mark here. You can simply click on that. The order would be cancelled. And in this case, you can modify the required price. For example, you want to trial, and the good part, you can also trade it from the you can modify it from the screen itself in the chart trading, right? So let me zoom in a bit. So you can see we entered at somewhere around here, right? So PNL is getting changed, and if I simply drag this on the screen, right? So let's say I want to modify here, right? Automatically that order would be changed here. Let's say if I want to make my stop loss to be here, and yeah, automatically it is updated, right? So it's as simple as that. There are multiple ways. This is a manual way of trading it. However, the way you want, you can trade it in here, right? So leverage, you should not make your position sizing just because the leverage is available. As per the risk management, you have to trade. Even though my stop loss triggers here, I would not lose more than 500 rupees because I know that is how the position sizing is made. If you are entering into position or exiting the position as a market order, in most of the cases that would be the case, you have to pay 0.05 percentage. So 0.05% may look very small, but it will be very huge in the longer duration. So that's why number of trades you need to limit. For that, what we need to do, if you want to limit the number of trades, you have to trade it with higher frequency. For example, at the present moment, I'm planning to trade it with 4 hours or 6 hours. So these are the two time frames I'm presently working on. Number of trades reduced, then obviously the number of transactions reduces, and obviously with respect to that only you have to pay the percentage. Since you are paying a fractional value, it is highly recommended that you trade it with a higher time frame so that you reduce your number of transactions and also the cost accordingly. Even though if you enter the limit order and you are entering it, say for example 97,000 rupees presently it is running, and you are placing 97,001 rupees as a limit order so that you want to enter into the market aggressively, in that case also it would be considered as a taker order, right? Maker is limit order, taker is execution made within hurry, so our market order, and for that you need to pay the higher charges, 0.05 percentage. And recently they have launched this future scalping offer. If you are someone who is kind of a scalper who trades within 15 minutes, so in that case you can see closing fees would be waived off, so you don't have to pay any closing fees. Only 0.05 percentage one time charges you need to pay, applicable for BTC and ETH futures trades only, right? This is a very recent offer, you can also utilize. So you are trading in a very shorter time frame, within 15 minutes, the charges would be 0.05 percentage one time for both the transactions, which means effectively for one transaction you are paying 0.025 percentage. So now coming to the conclusion, again as I said, it's an underline I'm presently exploring with very minimal quantities, and once the overall stabilization is happened at the moment, the stage, if you ask me the progress, we have successfully made the overall data fetching to the AMI broker, because most of our systems are designed in AMI broker, and from AMI broker the data is coming up and order is also getting placed. We need to finally conclude the overall process of automation. Once that is done, slowly we are going to scale it up, and I strongly recommend that, again I'm stretching this point, just because the leverage is available, don't take the leverage. Effectively utilize the leverage and make your position sizing according to the comfortable risk that you can afford. That is very important. That's it from my end. I hope you got the clarity, and very importantly, crypto markets are very volatile, and there are certain times where within one candle only you will get around 3 to 4% variations and all. So that's why risk management and effective calculations of the position sizing is very important. Risk is high in crypto markets. Make sure that you take your decisions effectively based on your comfortable decision. Whatever the information that I have shared so far is for educational purpose only. Don't consider it as by or sell recommendations. That's it from my end. See you in the next video. Until then, take care. Bye bye. Jai Hind.